Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
And just like that, it is the first weekend of summer.
You know what? I feel like it must be a really, really important show today. I mean, anytime you have the most important producer in the world doing the show today, oh my God.
Because he knew Lisa was coming in.
That's right. He knew Lisa was coming in. That's
so
right.
nice.
Yeah.
Frank is off.
Yes.
Where is he this week?
It's a working weekend.
Yeah, right.
Yeah, he is. He's at a lender conference. So,
And
yeah.
where would the conference be?
I don't know everything that Frank
Somewhere
does.
south, maybe?
Is it Punta Cana?
No, it's not that far. Not that far. Toronto, maybe? Yeah.
Well, because
He's still in the country,
Frank
I
doesn't
believe.
go to conferences in Toronto. Come on.
Sure he does.
Yeah. Oh, actually,
Well, they
it's
went to
summertime.
Greenland or
It's
Iceland or
it's
wherever.
summertime, though.
Oh, yes.
You remember a few years back, and I don't think Frank saw every time he was in here one show and it was snowing. I was like, Frank, that white stuff right there, that's called snow.
Well, we're glad to have Lisa with us.
Thank you. Happy to be back.
And
right.
how about me?
Yeah, look, well, we're always glad to have you. And, of course, Greg is here.
Hey, Greg's here, of course.
The whole world is here. We're ready to go.
You want to know something Greg and I worked on yesterday, which was so cool? Am I allowed to say this? I'm allowed to say this, right?
Yeah, why not?
He was about to say no.
So you know how AI is just off the charts crazy right now. So Greg and I were working on this really cool platform. You know what, Greg? You might as well explain it because I'll butcher it.
So basically what we're doing is, just because, Paul likes to travel a little bit here and there, and Jocelyn needs some social media stuff, so we created an AI avatar of Paul.
Oh, God.
Yes.
Oh, that's
Yesterday.
awesome.
It was so cool. And it's like my voice looks like me. I had
You mean long after he's gone, we're going to have this thing hanging around?
For all
oh,
eternity.
no.
I actually had to do like a disclaimer saying, I, Paul Rushforth, certify that Greg's allowed to do this because people could use it in the wrong way, right?
Oh,
that's
you
true.
could have
So
so
because
much
Greg could
fun
feed
with
anything.
this.
Greg could feed anything to this avatar of me saying whatever.
So how close is it to reality?
It's pretty good. You can still tell, like it's got some little tells to it, especially if you're somebody that knows Paul quite well. You can hear little inflections in the voice. And
Yeah, there's no F words. So
I didn't say it, but no, it's pretty realistic. I'm pretty amazed by it, I have to say.
Wow.
I actually, speaking of F words, I did a podcast yesterday. And I was like, can we swear and stuff like that if something slips out?
You really want to?
And the guy's like, if something slips out, you could swear, no problem. We take a break. He's like, I said if it slips out. Like,
Not a regular course of conversation.
It's not every second word, Paul.
All right, we're most of the way through June. How's June looking now?
It's been a good month. Like, it's been quite busy. I feel like it's tailed off a little bit recently, but it was a strong start to June. I mean, we still have, 10 days left? Something like that? Yeah, so we still have 10 days left. But I think it's gonna finish stronger than June of last year. Number of sales will be, I think, definitely up. We're right now year to date, we're flat as of the end of May for number of sales, and we're just modestly up with our average sale price. So I think by the end of June, I think we might be up number of sales year to date, and I think our average sale price is going to continue to go up. But it's just modest. I mean, when you look at the average sale price year to date, it's up 2.4%, right? So I said
That's a usual Ottawa market, though, in the old days.
I said at the start of this year, I said we're probably going to be somewhere in the 3% range up this year in our average sale price, which is a normal kind of. I mean, I wouldn't say percent is flat, but a little less than 3% is pretty flat. So 3% is a typical Ottawa market. We're probably going to be between 3 and 4%, which is a strong-ish market. A strong-ish market, really, is what it is.
Yep.
So
We've been slammed.
Really busy?
Well, we are. So obviously real estate is a huge part, of course, but a lot of renewals and a lot of people refinancing and or renewing. So there's been a lot of that happening.
Are you having to get creative with renewals?
We are. Yeah, in a lot of cases. There's a lot of debt management, cash flow management that's happening. So that's a big part of the conversations that we're having or that I'm having right now with clients.
Lisa, are you finding that we talked about this before too? People are struggling right now financially, really struggling. And I don't care if you're making big money or small money, people are struggling. And you must be doing a lot of sort of renewals because of that. Like in the past, would you have done renewals for maybe someone to finish a basement or to
refinance?
Refinance, it take some money out or something like that. Whereas now, are you doing these for people to survive?
Yeah, we really are. We really are. A lot of it is, like I said, cash flow management. So It's being able to afford your life now. So talking a lot about extending the amortizations out. I mean, don't be afraid to do that. You can extend it to 30 years, up to 80% of the value
Is
of
that
your
only
home.
as long as you started with 30 years?
No. Well, you're refinancing.
Oh, okay,
so, yeah,
okay.
you're refinancing. So you're resetting the clock. You're resetting the terms. But you know what? Commit to the lowest payment and then put extra payments when you can. If you can put extra on the principal, that'll, keep you on track. And you're not married to a 30-year amortization forever. Mortgage will come up for renewal again, and you can just shorten it right back down if you want.
Well, you
to.
can pay more every month if you want.
You can
right?
pay more. Yeah, you can. You know what? $100 here and there, even throughout the year, it'll make a really big difference on the principal and the interest that you pay.
And what kind of a difference does it make to your cash flow?
Oh, it's huge. I mean, we just did one the other day where we did a complete consolidation and tied up everything, and we took their cash flow up about $2,600 a month.
Wow.
So, yeah, that's very significant. We were talking earlier about kids' sports and the cost of, just basically living and groceries. So when you couple higher interest rates than you were paying, because a lot of those mortgages are paying or had lower interest rates at the time that are coming up for renewal, that's a really good way for people to be able to afford their life now. Or we're also breaking terms because a lot of penalties are only 3 months of interest right now. So we're getting them out of the high 5s and low 6% because, again, the cash flow savings on that, the interest, $20,000 is a lot amount of money to save on interest.
Let me ask you a
Who's
question.
got high fives and low sixes?
Yeah.
No, who's got those? Like people that got a mortgage a year ago?
A few years ago, like 2-3 years ago. Yeah.
Wow.
I got a question for Lisa. It's an avid listener of the show. But rather than Lisa answer, Steve, you're so smart. You've been around Frank and I for years that you might even know the answer, and Lisa will tell you if you're right on this. Okay,
Take a stab at it.
So an avid listener of the show sends a question saying, "What's the smallest mortgage most banks and lenders will consider? 50, 100, or other?" So before Lisa tells us the real
Multiple
answer,
choice.
what's your
I know it used to be 50.
Okay,
I bet it could be 100, 150 now.
Lisa?
Yeah, so 50,000 is about the right number. Some lenders will do 100, 150 as their minimum if you want them to pick up the fees. So you can transfer for free, but yeah, it does have to be a certain dollar amount for it to be profitable for them.
So when
done.
So when does a mortgage get too small for a homeowner to consider switching lenders? 50K?
Would
Yeah,
you go
typically.
line of credit instead?
Yeah, that's what I would typically recommend. Maybe you can look at going with a line of credit instead. That way it's fully open. You pay minimum interest, and then you can throw whatever you want to at the principal.
Last question.
My goodness.
He's an avid listener of the show. We got to answer
I
his
hope
question.
you didn't print this out. We got to save the trees.
Well, no, I'm sitting on my phone doing this. I know how to multitask, by the way. Now, I don't have my glasses on, so it's in big font, obviously. Regardless of mortgage size, Lisa, what advice would you give to someone renewing in the last half of 2025 or in 2026?
Oh, that's a great question. Flexibility. And I'm pretty sure I talked about that the last time, and it's still the word. You always want to be as flexible as possible with the mortgage term that you're choosing. You also want to look at making sure that it suits your lifestyle. Like I was saying, maybe extend the amortization 25 to 30 years if you need to boost that cash flow, if you're coming from a lower interest to maybe a bit of a higher interest rate, and get looking at things early. If you're in 6 months, it's not too early to start looking and figuring out a plan. Rate is not everything. You really have to have a right mortgage plan that's going to suit your needs.
And then, so the last comment I just got, someone just wrote in and said, "Why is the mortgage side of this show so much smarter than it usually is when Frank is here?"
Is that from Frank?
That was, yeah. And how do we get rid of Frank and replace him with Lisa? That was the other one, the comment that came in.
Ah, that's nice. Well, we love
that was
Frank.
me. That was me writing myself an email,
Frank.
actually.
Now, what
Frank.
rates are people coming off now to renew?
So anywhere from like just below 2% to into just 2.5%, maybe.
And they're going to 4s, right?
They are, but you know what? If they were managing things properly, just like those that were in a variable rate mortgage, so where your payment doesn't change or doesn't have to change, as the payments were going up, people really should have been making those payment increases because your mortgage will allow you to make increases as you go through to your regular mortgage payment. And again, that's cash flow management. You need to be able to adjust to the terms that you're coming into. So a lot of people did. Unfortunately, a lot of people didn't. But again, that's why we look at different plans to extend the amortization and lower the payments.
And are most going variable or fixed?
I still have a lot of people going variable. A lot are variable.
Why would you
variable.
not? Why would you not?
Well, some people want the security of, like, they think it's the security of fixed,
They
right?
think it's the security. I mean, there's risks in fixed. You know, you could be looking at a much higher interest rate penalty. We're in a downtrending rate environment. So let's consider if we take a fixed rate today and the rates continue to go down, are you going to be okay? You know, in a 4.2, let's say, percent interest rate, which is an awesome interest rate. But are you going to be happy with that or comfortable with that when the rates are perhaps at 3.2%? You know, you're going to be looking at a really high interest penalty if you're in a fixed rate mortgage. So variable and adjustable rate mortgages,
Unless
3
you
months
go
of
with a
interest.
non-bank lender, right?
Well, no, well, it's still going to be higher. Yeah, because they're
But
going to
not
charge you
as
the
high.
higher of an interest differential, or they're going to charge you 3 months of interest.
Right.
So, and that could be the difference between $5,000 and $15,000.
So
or
what's
more.
your recommendation?
I really like variable, and I've always been a variable or adjustable, but it really depends on the client, and it has to fit the needs. A lot of people like variable, fixed payment. Hopefully, it doesn't need to change. Again, it's managing that.
So difference between variable and adjustable?
So variable, your payment stays fixed.
Ooh, I don't like that.
Well, it's great. Think about it. Interest rates go down. Now you're paying more of your regular payment
That's
to your
good.
principal. So
That's
now,
good. I
you're
don't like
paying
it
your
the other
mortgage
way, though.
faster. But then if it goes up, it's the same interest rate. It's the same risk, though, as if you had a fixed rate and you haven't increased your payment. I mean, you have to manage what's coming.
So in this environment with rates going down and you're in you're in a variable rate mortgage, as that rate's coming down, you're just paying more in your principal.
Yeah.
Your payment doesn't come down, which sucks, but you're also paying more of your principal off, which is awesome.
Which is great, because
Yeah.
if then they start to trend up again,
Yeah.
you're already ahead.
And you can lock in.
And you can convert it to a fixed rate. Yep.
God, you sound smart, Steve.
I do or she does.
No, you sound
Lisa,
smart. The way you
Lisa.
ask these questions is brilliant, Stephen.
Thank you for writing them out for me, Lisa.
Oh, yeah, you're very welcome.
521 Talk 521-8255. Welcome back. Is it my imagination, Paul, or are townhomes and condos getting closer and closer in price?
Some are. Depends on where you're looking in the city. You know, are you looking downtown core? Are you looking, but they are. They are. I mean, townhomes. So we saw during COVID, townhomes probably rose faster than just about everything.
Yeah.
And as the prices started coming down, townhomes came down quicker than just about everything. So we saw them rise really quickly, where townhomes in suburbia were going anywhere from, $7.25 to $800, depending on where, south of the city, west of the city, or east of the
That was
city.
bonkers.
It was absolutely bonkers. But now, I'm seeing townhomes listed at $550. Now, that's a small townhome.
Still, though. That's
But
like,
$550 for a townhome. Now, keep in mind, and so this is a conversation we always have with sellers. Sellers are starting to become a little bit more realistic when it comes to pricing. As we came out of those COVID periods where homes went bonkers and then prices really started to drastically come down, people were still saying, well, my neighbor got, well,
Yes.
It doesn't matter what your neighbor got. The prices have actually changed. Now sellers are a little bit more realistic, where they're now saying, well, 2 years ago when I should have sold, my house would have been this, but now because prices have gone down, now they're this. So they've started to become more realistic of what's happening in the pricing. And now we've seen we're probably as low as we're going to go, but we are seeing townhomes in the 550 range, 575, 6, some of the bigger ones in the 6.25 and the 650 range. But those same townhomes were $150,000 more. So the conversation always is now, damn, I lost $150,000 if I would have sold 2 years ago.
yeah, you didn't.
But I also say to them, but listen, if we didn't go through the crazy period, you and I'd be having a conversation with your townhome in the 4s. Like that's an Ottawa market, an average Ottawa market, where homes went from, $350, maybe in the next over 3 or 4 years, maybe into the low 4s, maybe. Well, we saw them so drastically high. They've come down, but they're still way higher than they would have been if we were in just a normal Ottawa market. So trying to have that
And
conversation.
your buying power hasn't changed either if you're selling, right?
No, absolutely not. It hasn't changed. And I think that once people realize that their house is actually worth more than it should be worth, even with prices coming down, they start to understand, okay, yeah, this is great. I mean, we went through that crazy period. Escalation went so high. Now we're down a little bit, but we're kind of halfway down the mountain rather than all the way down the mountain.
Yeah,
And
not
so-
even half, right?
Not even half. I mean, we're maybe 30% down the market. No, we're not 30% down on pricing, but what I'm saying is, if we're using a mountain analogy, come down about 30%, and that's probably where we are. And we're on the uptick right now. Prices will start to go up. We're already seeing the average sale price up 2.4% this year. Probably in the 3 to 3.5 range, which is a good Ottawa market. So we're on the other side. Financing's is getting cheaper, so people can afford more homes are slowly going to start going up. And the days of homes going up the 19.9% and the 20% like we saw in 2 years, it's dead. Like, that's dead. It'll never come back. Well, I would say never, but
I wouldn't even say days. It was like a day. It was like a blip.
well,
It happened pretty quickly.
it happened really quick. Like, one day you're selling a house for 700,000, and then the next day it's at 750. You know, it's just like the comparables just kept going up and up and up and up. The only people I feel really sorry for are the people that call who bought at the absolute peak in that Jan, Feb, March, and April of 2022, and they're calling to sell now. That's where it's like, oh God, you're in trouble. But
they paid a lot of principal down, right?
They would have paid a lot because it was cheap money back then,
some
right?
were, but lots are underwater.
Yeah.
So what do you do if you're underwater?
Don't sell.
You have to stay, if you can, and that's where, again, cash flow management.
Yeah.
Just the theme of the show today.
Yeah.
You got to figure out how to restructure. We got to lower those payments so you can afford to stay there.
And a lot of people, we've always said real estate is a long-term game.
Yeah.
The only time it's not a long-term game, and unfortunately, that's probably 50% of our market right now, is divorce, right? Divorce.
So much.
And actually, I don't know if you guys, I saw some on social media today, the percentage per country divorce rate. And Canada was at 47% divorce rate. Now, whether this is accurate or
I
not.
did it twice. Does that count?
Yeah. Well, I don't. Lisa, I think
You're
absolutely
carrying the
everyone in
average.
this isn't everyone in this room divorced. So, so we're 100% in this room. But
No wonder we didn't let Frank in today.
But Portugal was at 97%. Now,
No kidding.
whether these
Must
numbers
be easier to get a divorce in
but
Portugal.
Spain was high too. Spain was like 74%, but Canada was at 47%. Which, whether these numbers are just fake or not, it's probably pretty accurate in my opinion.
I think it's been around 50% for quite a long time.
Which is why you always go variable.
Yes, I know. I know you are. I know you are. But
is why you always go variable, right?
Yeah, flexibility, exactly. You never want to have. I think in the lifetime that I've had a mortgage, and I've had a mortgage for quite a long time, and for very different reasons, and on different homes, flexibility. I think I've taken a fixed rate maybe twice. So again, the flexibility part of it. How could you not want to know at least one certainty that I know I'm only going to pay 3 months of interest?
But Lisa, that's part.
You have no other certainties, really.
Yeah.
But Lisa, that's got to be part of it's part of my conversation with people. It's got to be part of your conversation
Always.
with people when they're like, what should I take, fixed or variable? And in the back of your mind, they're like, well, what's the likelihood of you getting divorced? And everyone thinks, oh, I'm never getting divorced.
2 years, 3 years,
change.
5
Yeah.
years. I mean, 5 years is a really long time. Look what happened in the 5-year span of 2020 to 2025.
Yeah.
Yeah.
You never know what's going to happen. So the days of people taking a long 5-year term, at least in my practice, don't do a lot of them.
If you really want to go fixed, would you recommend 3 years?
3 years seems to still be the sweet spot.
It's a lower rate too than the 5.
It's a bit of a lower rate. Sometimes it's flat. It's not a huge difference, but it's going to offer you more flexibility sooner. And I think Frank mentioned on a show recently, your likelihood of having a lower penalty is there.
Yeah.
But you think 5 years. Steve, you weren't even gray 5 years ago.
Look what you've done to me.
Right? Right? You were jet black.
So the variable is actually cheaper than the fixed right now, and it doesn't look like fixed is coming down anytime soon.
It really depends. It depends on the discount that you have, and it depends on the product. So
and the
there's
United
no
States
one
of America.
term. Well, yeah, we're a different animal over here. You know what?
No, but between the bond market and everything
and
else.
the Trumpian factor.
That's what,
yeah. You know what? It's very flat on the fixed rate side. There's not a whole lot when you go from 3, 4, 5 year terms.
Right.
A couple of the lenders just brought down their shorter 1 and 2 year terms, but a lot of that is the manipulation of the penalties because people are paying out their mortgages, and if the posted rate comes down, then it's typically throwing people into an interest rate differential situation. So instead of paying 3 months of interest, again, it's that risk is taking a fixed rate. Now you've gone from, again, maybe paying $5,000 to paying $15,000 just because the bank lowered their 1 or 2 year posted rate, because that's what they're going to base.
Don't talk to me
on.
about posted rates. There should be no such thing.
Yeah, well, banks have to make money. As a shareholder in several of the Canadian banks, I'm, quite happy that they do manage things the way that they do.
Where's Frank?
Yeah.
521-TALK, 521-8255. We'll be right back. All right, 54% of renters want to buy a house within the next 2 to 5 years. You know what some of them are waiting for? Prices to come down.
Yeah,
not going to happen.
Good luck with that. And listen, 100% of landlords would like tenants to buy houses right now, let me tell you.
Yeah, for sure.
Tenants are nightmares, like literally nightmares. But 54% of tenants are waiting for prices to come down. That's 54% of people that are just off their rocker because prices are not coming down. We saw
you can't time it out like that.
You cannot time it out. And listen, besides last year, the year before where the prices went down 5.5%, we haven't seen prices go down since the early 90s, and they went down 1.2, 1.4%. So if you're waiting for prices to come down, you're missing the boat.
Like in the last 40 years in Ottawa, they've come down, what, twice?
Three times.
Three times.
So if you're waiting, it's like, it's like going to the casino and hoping to, hit $1 million payday. Like, it's just not going to happen. We're going to consider the thing about Ottawa, because we're a government town. We have our working environment is very stable here in Ottawa. Our prices never really go down. We don't do the Torontos and the Vancouvers with the peaks and the valleys. They'll go up 20% one year and down 20% the next year. We'll never do that. We're just a modest building price acceleration market here in Ottawa. Like, we're going to go up to 1, 2, 3, 4, 5% every single year. Some would say it's boring, but it's consistent, and we never have to worry about prices going down. When they do go down, if they do go down one year, they're going to come back the next year. But like we said, in the last 40, 50 years, we've really not seen prices come down at all. And when they do come down, like in the early 90s, they went down 3 years in a row. And I think the top year they went down, I think it was 1.6% or something like that. So it was really tiny. Whether you're up or down 1.6%, it's really a flat market. If you ask me, it's a flat market. So
certainly not worth waiting for.
It's not worth waiting for. And listen, if you're a tenant and you think prices are going down, first of all, rates are really, really decent right now. I mean, we've seen them way lower, but they're great. But they're great right now. They're and really Frank said for years, just the new norm is going to be 3.5 is going to be a new norm of rates. And we're almost there.
Yep.
So rates are really good. Prices, I can't see prices going down. Like it's just not going to happen. We've already seen prices going up modestly. So if you're one of those renters and you're waiting, you are making a massive, massive mistake.
There's a reason that we had the stress test set at 5.25%. Historically speaking, 5% is a really good interest rate. When I bought my first house, I think I got like 5.25% or something in that range. And it was, a bit of a discount, but that was a really good interest rate. So, I mean, they've gone up, they've come down. They're not going back down to 1%. I mean, it's just not something that we can sustain. That doesn't make any sense.
No, the biggest thing right now, the biggest, I'd say, hiccup in the market right now is investors. We saw during COVID when the rates were so high and the prices were so high, the investors were out of the market. Not only were first-time homebuyers out of the market, but investors were out of the market. Rates have come down, prices have come down, first-time homebuyers have come back into the market. Investors have slowly come back into the market because you can cash flow positive. But we are, in Ontario, the worst province for tenants ever. And tenants, when Doug Ford came out and said...
You mean for landlords' rights?
The
landlords' rights. Well, I'm saying tenants are a nightmare. They're a nightmare.
Not all.
Not all, but so thanks for keeping me legal there, Steve. But listen, when Doug Ford came out and said when we were going through COVID, if you can't pay your rent, just don't pay. That was the kiss of death right there for landlords. Landlords are in a really, really sticky position right now with tenants because there's all sorts of tenant forums and chat rooms and all that stuff where tenants are just deciding not to move. Some of them are just deciding not to pay. And we are the worst province in Canada. They're all pretty bad, but we are the worst province in Canada when it comes to landlords' rights. It's worst.
Pretty interesting that they have never, or it's never come about that you are reporting rent payments on a credit report because,
yes.
People are like, oh, I pay my rent. And a lot of people do pay their rent. They should get credit for that on their credit reports.
And they should be penalized if they don't.
And they should be penalized if they don't. Exactly. That's a major debt. That's a major indicator if somebody is going to actually pay their mortgage or not. You're not paying to live in the home that you are renting.
Why is that not on a credit report and your cell phone is?
Yeah, I don't know. It's true. Yeah, cell phones are, and they've never. I think I heard rumblings about it somewhere along the line many years ago, but it's just not something that's ever come to be. That would be a great change. That would make a lot of impact for a lot of people, and it would also help landlords and investors. Yeah.
Listen, I'm all for everyone getting an opportunity and having a place to live. So I love the fact that we have investment properties where tenants can have a beautiful place to live and we're taking care of them. What really irks me is I know how hard I worked to afford the properties I have. I know how hard everybody else works to afford those properties. And when the tenant just says, yeah, I'm not moving out, and the landlord desperately has to move, let's say he has to sell because he has to pay for, his kid's school or his university or hockey or something like that, or afford to live.
Yeah.
And a tenant's like, sorry, I'm not moving out. You can't sell that home. It's almost impossible to sell. And that is happening right now in Ontario. I'm dealing with it.
And by the time you get to the board, it's too late, right?
It's too late. If you buy an
investment property, and what happens if the tenant, you have to have vacant possession when you're buying a property you plan to move into. What if that tenant decides at the last minute they're not moving in? Then we can't close on the mortgage because you're not going to have vacant possession, and that was the terms of the owner-occupied mortgage that we arranged for you.
Do you know how many situations I'm dealing with right now?
Yeah.
And some of them are litigation situations where it's just the tenant just decided, I'm not moving. Well, guess what? It's not your house. You know what I mean? So
So by law, if you want the tenant out, how long do you have to give them?
Well,
assuming their lease is up.
Assuming their lease is up and they're on month to month, you have to give them a 60-day notice. The problem is a lot of tenants are just saying, sorry, no, I'm not taking that 60-day notice. And some of them are. I was in a house, I was showing a situation this week. I was showing someone a rental. And I walked in and it already had a tenant in it. And the tenant had the place so beautiful. You could lick the floors. It was spotless. And they'd bought something and they were moving out. And they were so respectful and so proud. And I was like, you know what? As someone who has a lot of investment properties, I want to say thank you to you.
Yeah.
Thank you for treating this place. It wasn't even my place. I want to thank you for treating this place the way you've treated it. You treat it like it's your own. And it was in perfect shape. And there's just not enough of that out there. And then you go the other way. Now in Alberta, though, the rules are a little bit different where it's just like, oh, by the way, I know the rent's $1,200, but now it's like $7,200. You can do whatever you want out there. That's the different story.
But there's got to be a happy medium.
There has to be a happy medium. Right now, the system is absolutely broken.
They should be reporting it on the credit bureau.
That would change, Lisa, that would change everything if you could do that.
It really would.
So if you miss a car payment, it goes on your credit report, does
Absolutely.
it not? So
literally everything else that has to do with credit. And rent is credit. You're being given credit by the property owner.
Yeah.
And pay them on time.
And same with mortgages.
Yeah, mortgages. Yeah, a lot of mortgages are reported on the credit bureau now, which is great. Not all, but most are. And it's a really good indicator. It's the number one indicator, really. If you're not going to pay your rent, are you really going to pay your mortgage?
So why is it not on the credit report?
I have no idea.
It doesn't make any sense.
That should be, your mortgage
that
is,
would
so why shouldn't your rent?
That would solve so many problems for landlords.
But
and even if you're looking for a new place to rent, you can say, here's my credit report. I've always paid my rent.
But it's not. So I would say paying your rent is secondary to tenants not moving out when properties are when owners want to sell their property. That's the number one problem.
Yeah.
Paying your rent, I don't run into too many problems where tenants aren't paying their rent. I mean, they're usually paying the rent. The problem is when a landlord is trying to sell their properties, where the nightmare is happening right now in Ottawa, because that's where I work, but in Ontario.
And the problem is the amount of time it takes for your case to be heard.
For your case
Long
to be
time.
heard, and
I think they're still 7 months behind.
Well,
the landlord-tenant
they're getting
board?
better. I mean, you can get in there in probably 3 to 6, but 3 is aggressive. Like if you can get in there,
but they don't make a decision that day.
They don't.
No,
and there's so many rules and regulations, and you got to do everything the right way and cross your T's and dot your I's and the right forms and all that. It's a lot. It's a lot right now, and it's a problem. It's becoming a problem.
It's been a problem for a while.
It's been a problem for a while, but it's never been this bad. And the thing is now's a perfect environment for investors. For rates are down, prices are down. What a great time to buy investment properties. There's some people that are leery now to buy investment properties. I'm always a big proponent of buying doors. But there's also other avenues out there where you can have stress-free passive income that
you could invest in mortgages.
That you're not dealing with tenants. But I mean, I sell real estate, so I'm not going to say don't buy real estate, because I'm a huge believer in buying real estate. But when you are putting a tenant in your property, putting the first tenant in is a huge mistake unless it's the best tenant. I would be doing your due diligence, following up in references, doing credit checks, doing everything the right way in order to get the perfect tenant. Because if you have the wrong tenant, getting out that tenant, Steve, they're going to be as gray as you by the time they're done.
Whoa,
and that is gray.
Trouble.
That is gray. That is
that's
gray.
Big trouble.
Yes. So,
Lisa, how much of your net income should you be spending on rent or mortgage?
Rent would not be my area of expertise. On your mortgage, it's supposed to be no more than 39%.
39%.
Yeah, so that's your gross debt service ratio. Excuse me. Exceptions are made where you can go up to sometimes 40, 44%, assuming you have no other debt. You've got, a fallback plan. You've got some investments or some other cash. Again, it's a full picture that they'll want to take a look at, but typically it's 39%.
So half of renters are spending more than a third of their net income on rent. How the heck are you supposed to save for a house if you're doing that?
Well, you don't. That's the problem. You don't save for a house. When you get in that rent trap, it's really hard to get out because rent is quite expensive these days. When you're looking at an average 1-bedroom or 2-bedroom, apartment is what it is. And, the average sort of townhome in suburbia is 25 to 27 is what an average townhome is. And then you got your utilities on top of that. And then you got to run your car payment and your car and your gas and your groceries. And before long, how are you putting money aside for a down payment? And that's the biggest issue right now because rent is up. Mortgages, it's nice that the rates are coming down, but rents are actually up. And the difference between is it smarter to rent or smarter to buy? You used to be able to make a case that, it might be a little cheaper to rent. But whereas now it's almost becoming a wash when it comes to rent and buying. Like it's smarter to buy 100%.
Excuse me. Yeah, you're making a mortgage payment, a full-on mortgage payment when you're in some of the rents for some of the townhouses for sure that we're seeing.
Yeah.
So how are you supposed to save then to buy a house?
A lot. Again, I can only speak from experience. We had one of our kids moved out, wanted to, go on their own kind of thing. And then I'm like, you know what? You've graduated. It's time to start, getting more of your investments going and you're working full time. Why would you want to throw that money away on rent? I mean, live at home. It's a great place to be. Yeah. But kids are living at home longer, I think, now, so they can save. Because
until they're 50.
Out, it's too much. Okay, that's pushing it just a little bit.
Hey, listen. I'd still be living with my mommy if she let me.
With my mommy?
With my mommy? Are you kidding me? Have my meals cooked for me and my laundry done? It'd be absolutely perfect.
I do not do laundry. I do my own laundry in my household. Everybody else does their own laundry.
There we go.
That is too funny.
Yeah. I hope Petra's not listening.
Your mother's going to call, that.
I know. You know what she's going to say?
Not a chance in hell.
She's going to say in her Australian accent, Paulie, you can move in any time.
521-TALK, 521-8255. We'll be right back. I'm back to the show. Paul is here. Lisa is here.
I am.
Steve Gregory's here.
Greg
Tilley's here.
Gregory Tilley. A lot of Gregorys in this room.
Yes.
It's a great name, isn't it, Greg?
Fantastic.
Yeah.
Okay, so 25% of renters, what do you think is the reason they haven't got a home yet?
Sorry, 25% of renters?
Of renters. Why haven't they bought
They don't have a down payment, can't qualify for a mortgage.
Yeah. Don't qualify.
Yeah.
But we just said that. How can they have a down payment? How do you pay, let's say they're paying $2,500 plus utilities, plus. Let's say they're $4,000 out of their pocket just for rent and living expenses. That's a lot to make in a month. To now put together, let's say, a couple grand every month to put aside for a down payment. You got to be making a very, very healthy income to save if you're living in just an average townhome in suburbia.
But that's a quarter of people renting that want to buy and just don't. It is,
but there's also buyers. There's also home buyers. Like I was just mentioning that we're doing a lot more reverse mortgages. Mm-hmm. People that have retired and live on a fixed income, and a lot of people are retiring with mortgages. So reverse mortgages are becoming a lot more common and a lot more popular because people want to stay in their homes, and they don't have to make the payments that way. They can manage their cash flow to live their lives. And they're sitting on a whole lot of equity in most cases.
And how much of your home can you mortgage in that situation? What percentage?
They say up to 55%, but it's only, you have to be probably in your 80s to get 55%. It's very, very conservative. Typically.
So I should wait another year or two.
Yeah, a few more years. But when you consider that you have the guarantee of never, chip reverse mortgage.
So if you're in your 70s, let's say, late 60s, early 70s,
yeah,
and you want to get a reverse mortgage, what percentage of your equity can you use for that? Like how much of?
So a lot of it is going to depend on if you're male or female. It depends on your age. It depends on your postcode.
Male or female?
It does. Yeah.
Isn't that sexist?
Well, no, they're looking at life charts. Remember, right?
And so males don't live as long as females, correct? Usually,
typically, yeah. Down ways to die. There's lots of. That's usually.
Whoa! Are you calling us men dumb? Is that what you just said?
That's just the memes aren't about the ladies.
One of us in this room, Steve Gregory, might be, but not me.
Because we have to live with women.
Yeah.
Not true. So with a reverse mortgage,
we're all divorced.
Yeah. With a reverse mortgage, you've got the guarantee that, in Canada anyways, it's totally different in the States, but in Canada, you have the guarantee that you're not going to lose your home. there's no negative equity. And even if it did go to negative equity, you're not losing your home. They're never coming to take your home. You have to sell the home. If you're going to move into, it's no longer becoming your primary residence. So you move to a nursing home, let's say, a nursing facility, or you're moving to the cottage, whatever case may be, or you pass away. So you're not losing that house no matter what happens. So you can live very comfortably on your fixed income. You just still be able to travel. And I think a lot more of the generations such as ours are looking to live their lives a little bit more than past generations had done. And so people, again, retiring with a mortgage, perhaps retiring younger, will have a fixed payment. Now they can really live their lives a little bit more comfortably.
I think that's actually going to get even worse. Well, do you call it worse or better, whatever term you want to use? But
more popular?
Well, more popular because let's be honest, as millennials age, millennials are very, let's say, life experience driven, and they don't work as long as what we used to work. It was what our parents used to work. Not your parents do because you're old, but you know what I'm saying? Like millennials, most millennials are happy to retire early. Like they want to live. They want to live life, and I'm not saying that's a bad thing. That's a great thing. But so you might see more people might take advantage of this down the road as people start to, as millennials start to age.
And there's a very large aging population in Canada too. Is another reason that the reverse mortgage market is becoming a lot more prominent, and people are becoming a lot more interested.
Interesting.
It's a smart answer though. You know, you want to stay in your house.
Absolutely.
And more people want to.
You can bring in the care that you need if you need it. It's there.
And these retirement residences are not cheap. I mean,
they're not.
I got a neighbor friend who has a parent in one, and like, you know, it's this just so they can help her take her pills, and it's this for this, and it's this for by the time
it's
she's
$4,000,
done,
$5,000, $6,000 a month.
And
easy.
that is a very inexpensive retirement residence, $4, $5, $6 a month. So some of them are like $8, $9, $10 a month for a retirement residence. Like that's pretty penny.
Yeah.
What is the biggest mistake people make when they get a mortgage?
The number one biggest mistake I'd probably say is listening to the wrong people, not getting advice from actual professionals, mortgage brokers.
So Uncle Charlie's not a good person to listen to.
Things change. Things, even people that we've had, they've done one mortgage even on their second mortgage. When I went through my mortgage the last time, none of this happened before. I didn't have to give a blood sample, which sometimes it makes to feel right now when we're doing mortgages. You have to do a lot of investigation. But I think that the biggest mistake is people listen to the wrong people as far as what the best advice is.
Wouldn't you say that's almost
and then not getting
every
great
industry?
Flexibility.
That's
I
most
think
industries.
You definitely want to listen to the professionals, but I mean, we're talking the biggest investment you're going to make. I mean, you're buying a home.
Yeah.
You're putting a lot of money. You're taking on a very big debt. You want to have a good plan, and you want to be talking to somebody who does this day in and day out.
You know what's something funny? I just noticed on Steve's screen that producer Chris has said out by 57. He knows we don't listen to him, right?
As he's
putting the music on. He knows we don't listen to him.
Birthdays, Lisa?
Yes. My daughter is turning 24 next Friday.
Oh,
wow.
Yes. And on Canada Day, my husband's birthday. So you won't have to say how old he's going to be turning, but he'll be celebrating that on Canada Day. I get him fireworks every year, so
I'll bet you do.
Lucky.
I don't have anything right now, but my girlfriend's birthday's coming up soon, so I won't announce it now, but it's coming up soon.
What is soon? August, September?
Yeah.
Have a great week, everybody.
Have a great week, everybody.